Video newsletter for buysellshort.com for Tuesday, March 3rd. Another red day in the market today, even though we did look like we were going to possibly put in a near-term bottom. We had market up about 80 points when Standard & Poor's came out and downgraded their long-term rating for Bank of America's debt. The news was actually out an hour, did nothing to the stock. The stock actually ran to its close to its day highs, and then CNBC came out with quotation mark breaking news and reported the S&P downgrade about an hour after it happened, and that was it for Bank of America. And then the sellers and shorts just moved into the market, and we had a nice little, sell off into the close. Like I said, we were looking pretty good this morning for a continuation and the start of our vicious up move in the market. We're very oversold on all the indicators. Like I said in the chat room, this market tank over the last few weeks has been, it's more of a buyer strike than anything else. You've got most people just sitting on the sidelines, and the few sellers that are out there are being joined by short sellers that are just running rampant in the market. Dow is down 1,500 points over the last 2 weeks, or about 20%, and people are still going short. And a lot of people are on the sidelines and not long, and that usually is a recipe for a pretty vicious bear market bounce, which is what we're looking for. Again, we have not touched the 20-day exponential now for almost a month, and that is about as long as the Dow goes without at least bouncing back to its 20-day exponential. Right now, that's at 7,400. If we flip over to the daily chart, you can see we're still trapped in this bullish falling wedge. What the hell happened to our golden cross that you're asking? Well, the market tanked. We got pretty close there, and the sell-off over the last day just has pushed this cross out another couple of days. Still, it's going to come. It's just a matter of sitting and waiting, which is what we're doing. SMH, we got a further retrace today, and also what looked like a possible bottom. Of course, SMH and the market in general was down in after hours. Google came out, really didn't say anything, just, Google CFO came out and said that Google's not immune to this crappy economy. What a surprise. And the stock was down 20 bucks on that news. But again, volume's pretty low in after hours, so it is not uncommon for a rally to start, get slapped back down on silly news, see some continuation in after hours, and then have them gap the market the next day. So that's what we're looking for. We're looking for a pretty vicious bear market rally here. We're about a day or two off on our bounce target. And like I said on Sunday, even though we were looking for a bounce, it was just a matter of where the bounce starts. ASTM was actually a huge runner today. The company came out and reported that the FDA restarted their drug trials that got halted on this tank back in early January. Stock spiked up to the 50s. As I mentioned in the alert, if you were smart enough and able to scalp out of that, the add back was 40 cents and under. Also, like I mentioned earlier in the day, the stemmers are actually showing some life before that news. Journ, STEM, and ASTM were up on rumors of a possible House vote on stems. So keep an eye on the stemmers over the next few days. They look like they may be ready to bounce, especially if we see the market go on a move. STEM, as you can see, back down to its 200-day moving average, a perfect point for a bounce back rally. We would be looking for a move at least to the 8-day moving average. That is at $1.70. UYG is our play on the financials. Was looking pretty good here before the shorts hit Bank of America into the close on the other financials. This is our way of playing the bank stocks without actually having to go in and buy them. And again, we're still looking for a bounce back to the 20-day exponential, so 250 to 260 plus in the next few days. Just a lot of oversold stuff in the market right now. The thing about bear market rallies is they're vicious, fast, and extremely big to the upside. So while it's fool's folly trying to time bottoms, before they actually happen, in bear markets, you kind of have to nibble yourself in because the moves are so big that if you're actually waiting for the rally to confirm, it's over. So That's why we're in and nibbling on stocks like, you know, the SMH, the UYG, etc., etc. And then we can average up if the rally or the bear market bounce actually shows that it has some legs. For now, our key will be a break of 7,000, and then we would start looking to jump into a lot more plays, and then a move over the 200-day moving average in this time frame, 7,100, would still give us 2 to 300 plus point upside. So that would be the, you know, the money time to enter plays. So, you know, we continue to remain high cash and nibble on our, you know, plays and just wait for the bounce that is coming. So here we are looking at a little expanded version of the Dow Daily. As you can see, RSI, we're back below 30. Again, the last two times we've seen it below 30 was back in July last year, and then we saw about a 20% rally. It was about a 2,000 point, actually 1,500 point rally off of that oversold RSI. Then back in October of last year, we got to RSI under 30 and we had a 2,000 point rally. Or if you pull out that spike high, we had a 1,500 point rally again. So here we are sitting at an RSI below 30 yet again. No reason not to expect at least 5 to 600 plus point bounce off of this deeply oversold sell-off. So that's what we're looking at right now. Still high cash, but nibbling our plays and waiting to average up when they finally let the bounce go. That's it for the video. See you guys in the chat room tomorrow. Good night.